Be Wealthy and Smart, episode 1153.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about how mortgage demand recovers as mortgage rates fall for the fifth week in a row. This is good news for home buyers who have been frustrated lately with the rise in interest rates that happened so rapidly in 2022. Already in the latest week, mortgage applications have risen 7.4% according to the Mortgage Bankers Association. And with that decline in mortgage rates, we're seeing demand gradually return. Mortgage rates dropped for the fifth week in a row, and demand for both purchases and refinancing rose. The refinance index surged 17.7%, but was down 75% compared to a year ago. With refinancing virtually coming to a dead stop last year, many banks laid off people in their loan departments. But we should see some reversal with interest rates weakening a bit and already selling off into this year. Also, the purchase index, which measures mortgage applications for the purchase of a home, rose by 3.1% last week. So with all of this rise in interest rates, sometimes it can be hard to keep track of where we actually stand. So here's where the average contract rate is for 30-year mortgages for homes sold for $726,200 or less. That rate is at 6.18% for the week ending February 3rd, which is down from 6.19% the week before, so just slightly, 0.01%. For homes sold with a price over $726,200, the average rate for the 30-year fixed mortgage was 5.96%, and for a 15-year mortgage, 5.64%. The rate for adjustable rate mortgages rose to 5.56%. The Mortgage Bankers Association also noted that the average loan size on a purchase application was $428,500, which is the highest since May of 2022. They said high loan amounts in recent times indicate that this is a sign that those who are purchasing homes are not necessarily first-time buyers. And they said mortgage rates having fallen a little bit in the last few weeks is giving buyers the impression that the housing market is no longer in a recession. But affordability is still an issue, as is lower than usual inventory. There still aren't a lot of homes for sale, even with a tough year last year. And so buyers still don't have that many options, and lower rates may not really move the needle that much for a price-sensitive buyer who's also worried about the economic outlook. But mostly I think people are looking at what can they afford, and they're looking at the price of the home they want to buy and interest rates and the amount of down payment they have and seeing if they can afford the monthly payments. It really all comes back to what is consumer confidence in your job and your income going forward, and how much is that house going to cost you. Joel Kahn, Vice President and Deputy Chief Economist at the Mortgage Bankers Association, said this week's results are a step in the right direction. Purchase activity that was put on hold last year due to the quick run-up in rates is gradually coming back. As rates ease and housing demand remains strong, driven by supportive demographics and the ongoing strength in the job market. And that's a really great point. The job market has held up so well, and that is going to help the housing market in many cases. Of course, all markets are different, but in many cases, it will help the housing market along with limited inventory. Those two things are really going to continue to support prices, in my opinion. Greg McBride, Bankrate's chief financial analyst, said, "I think we could be surprised at how much mortgage rates pull back this year. The Fed continuing to raise short-term interest rates actually portends lower, not higher, long-term rates, including mortgage rates. The more the Fed raises rates now, the less those bond investors will need to fret about inflation, and the greater the risk of a recession when investors stampede into bonds, McBride said. Some analysts believe fixed mortgage rates may dip back into the 5% range in 2023, and we're going to look at bank rates forecasts to see what they have to say. Bankrate's chief financial analyst McBride said 2023 is not going to be nearly as eventful as 2022. We should see a notable pullback in mortgage rates as inflation pressures ease and the economy slows. He also said, but we're not going back to 3% anytime soon because inflation is not going back to 2% anytime soon. But he also doesn't think home values will collapse. There's simply too much demand from buyers with too little supply from sellers. He said, I don't expect broad-based declines in home prices even though mortgage rates have doubled. National Association of Realtors chief economist Lauren Yun said mortgage rates could fall to the range of 5.5% by the spring and summer of 2023. If that's the case, I think the housing market will see some rebound. He also said, we are in an abnormal market, and as the mortgage market normalizes, there is opportunity for mortgage rates to fall further. We know the Fed will probably raise rates 2 more times, he says, but it looks like the 10-year Treasury has already incorporated that information. Yeah, I think that's the main point. I talked on a recent podcast about another 0.25% hike possibly in March and a second one in May, and then the Fed potentially pausing or stopping altogether, which is a lot of the speculation that we're hearing. If that's the case, the market's already pricing that in because it looks ahead and anticipates these things. So if we are seeing the economy slow, if we're seeing any kind of signs of recession, if we're seeing anything like that in numbers that come out that are forward-looking and predictive, then it's likely that the bond market will take that information and drive rates lower. And if that's the case, that will spark more housing purchases. If that's the case, the worst of the housing market could be behind us. And what happened last year could have just been a temporary pause, and we could see strength in the housing market pick up again as rates decline a bit, as there's a little bit more inventory in the market, and the buyers who have pent-up demand go and make their purchases. So if you're in the housing market and you're trying to get the best mortgage rate for your new home, Zillow has 5 factors or tactics that can help you. Number 1, shop around for a lender. Ask around for recommendations or use an online tool to find a lender who can provide you with a loan that's best for your situation. Number 2, compare lender fees. Along with mortgage interest rates, each lender has fees and closing costs that factor into the overall cost of the home loan. When choosing a lender, compare official loan estimates from at least 3 different lenders and specifically pay attention to which have the lowest rate and lowest APR, which is annual percentage rate. This will help you feel confident you are getting the best deal. Number 3, increase your down payment. Did you know that your down payment amount can have an impact on your mortgage rate? That's because mortgage rates are generally tiered, and typically lower rates are available for those with a down payment of 20% or more. If possible, check with your lender to see if increasing your down payment will lower your mortgage interest rate. Number 4, improve your credit score. Your credit score may affect the mortgage rate that your lender offers you. Generally, the higher your credit score, the lower your interest rate will be on your home loan. Before applying for a mortgage, review your credit score and get in the best shape possible. And number 5, consider different types of home loans. Of course, the 30-year fixed-rate mortgage is the most common type of loan, but there are additional mortgage options that may be more beneficial depending on your situation. Consider all your options and choose the home loan that's most comfortable for you. Yeah, I think those are some good tips, and those can help you if you're in the housing market. It's not going to be easy this year, but people that have done their homework do have a lender lined up, have pre-qualified for their loan, have the maximum down payment possible, have good credit, etc. All of those things are going to work in your favor, and you want to tip the scale so that everything goes your way and you have the advantage over any competition. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you never miss one of them. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. share the wealth, and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.